What's going on, guys? It's GBP baby. Welcome to another video. We're just going to continue exactly where we left off in last video. This time we're looking at GBP USD large expansion weeks. Yeah, there's a lot of movement this week. We are looking at the Wednesday now. Now we had a lot of movement on the Monday and Tuesday, right? So what does that mean? That means that the Wednesday is probably going to be quiet. And you'll see what I mean by that. Although, you know, look at that. But generally speaking, the Wednesday is quiet. So let's look at the range as well. Asian session is something that I haven't spent too much time indulging in. Beautifully engineered low right here that we clearly wanted for lunch. FIFA Valley gaps. Nothing too crazy or spectacular, you know. But yeah, so I'm not really going to analyze this because it's not really clean price action. And remember, this is December, so second week of December as well. I realize that it's the second week of December that price action starts to get really disgusting. So that's something that we should all take note of. Because like I said, I've been saying this in every video recently, I am not trading December ever again. Anyway, right before so classic price action here. Why we open, we trade higher, creating the high of the day. Where do we create the high of the day? Midpoint of the Asian range. Break down aggressively, and then right as London closes, we climb one more time back into this breaker. This last little candle here, this wick, trade into that, and then voila. Now there must have been news for this expansion to the downside. But regardless, this is showing very bearish nature. Another thing, if you look at the 25% level, it'll be around here, right? And you can see how we just tipped right above that. Remember, we've got premium, discount. You can split these things into premium, discount, range, high, low. This range from this high to this low. So you can see we offer a premium, and then we can sell into that wick. And look at the reaction of that, absolutely gorgeous. And then we just consolidate. This is why I didn't really want to do too much on this day. We pretty much just range bound. Classic retracement after that 3 AM, which is the news embargo for London. And then we have this high here and this low, which creates a consolidation. And then one thing to take note of, just like the Asian range, once the low gets taken, we anticipate the high getting taken. So you can see we take out that low during the in-between period, and then we can now anticipate that high get taken, and that's exactly what happened. We find support. We have a nice breaker wick here, breaker candle. Sorry. Why is it a breaker? We've got a low, high, low, low. A lot of consolidation. Very big struggle to get up and close in this range. We eventually close it. Wick out that high, shows bullishness. Relative equal highs as well. We actually take out that high, so when we pull back, I'm looking at this breaker, and then we can buy that. And also classic retracement during the opening of New York, so we can buy as we trade down into that. And then where would we be targeting? Well, we can target the high of London, which is technically up here, but I'm looking at this range. So I'll be looking at this buy side liquidity here, so this wick mainly, and you can see we reached that just as 8:30 hits, and it wicks right up into this breaker, high, low, high, high break. So we can look at this candle, this down close candle right here, like so. Oh, do we not trade into it? We don't actually even reach it. Pretty sad. Never mind. But regardless, we'd be selling on this wick. And the reason for that is, like I said, we're looking at this buy side. It's London's high. No, it's not London's high, but it is technically London's high. Oh, it's not technically. It is London's. It's not London's. Technically, it's not London's high, but it's London's high. Then more consolidation. Call them lower. What happens at 9:30? Another news embargo. High, low, higher, high. Looking at this level here. How are we treating it? Consolidate, and then once we close below it like that after 9:30, trade up to it one more time, and then what happens? Price leaves that range, and what we're targeting this time, sell stops below here. So it's just a matter of finding liquidity. Now I'm making this sound really easy, but I'm not a millionaire yet, so but I promise guys, when I am a millionaire, I'll be teaching you all. Selling here would be crazy, but let's think about it. Is it possible? Yes. Why? We have a high, we have a low, we have a higher high. So this is a breaker block, right? We expect if we're disconsolidated or during New York, I'd wait for 9. If like at 8:30 we clearly took out buy side, so now I know that we're aiming for sell side. But you can see we're kind of just gyrating, and then eventually I'll be like, okay, let's wait for 9:30. 9:30 comes around, you can see we're consolidating in this range. Yes, we're wicking above every now and then. Volume is respecting this breaker because it's after these lows get taken, it's a breaker. Also, we've closed outside of it. Once I see those closes and I'm anticipating a run down to sell side liquidity, that's enough for me. And then as soon as it closes outside after the 9:30 bell, as we trade up back into this, technically it's another breaker in itself, but we don't even reach it. But we create a nice breakaway gap and the price continues lower. So that's nice to see. And then we can get out of our position right below that swing low in the London close. And in the London close, we also anticipate a run back up, and where to? Midpoint of the range created in the New York session. And that's exactly what we have. We trade right back to the 50%. Beautifully consolidated there. And then 2 p.m. hits, which was FOMC. I did trade Euro then. I'll make sure to leave a link to that in this video. We take out sell stops one last time. Trading after this time anyway isn't the best for me. It isn't what I'd be doing. I don't suggest anyone trades FOMC, although I made a trading video showing the execution. Yeah, it's not for the faint of hearted. And you can see we just run up, run, and then consolidates, and then I believe we continue for the new day. So let's go straight into the new day. We should be able to finish this week in this episode, hopefully, because I've been on this week for now 2 episodes. So this is our 3rd episode in this week. Right, excuse me. Let's just get this lined up properly. Now this continuation into the new day was pretty much classic price action. So this Thursday, sorry, was a beautiful continuation of what was going on. Now, one thing I want to bring our attention to before we get into that Thursday, let's look at price action real quick. So let's say we missed FOMC, not missed it, but we're like, oh, okay, we're expanding higher. We could buy this. Look at how volume respects this fair value gap and fails to trade into that massive liquidity void. If you don't want to wait for that, you could wait for this little buy swing high to get taken out and then buy on this candle as we trade back down into the order block. Stop loss below there. Why? Because we're bullish. We're running to some kind of liquidity. Then as soon as we take out this high, you can move your stop up. Now, I'm not suggesting do this, guys. This is not trading advice. Look, old highs, come back into it. And we're just going to look at how the old highs keep getting respected. Yeah. So we can be there accumulating all our positions. Bearing in mind we leave our stop down here as we're accumulating on the way up, because you can see we're going to a straight, just pure consolidation until the new day, where we dip down and we get offered another entry opportunity. So let's look at the Asian range standard. Asian range highs, relative equal highs. Look at that. Beautiful clean highs. Those are definitely getting eaten for lunch. Speaking of lunch, I'm hungry. And then we're also going to look at the midpoint, aren't we? Because that's what we do. Equilibrium classic opens, we dip down, trade higher, run and stop, little run and stops, and then we run for the sell side during London to create the low of the day. Classic price action here, guys. Let's just take a look at this, and I also want to look at the midnight candle. It was this part of the week which I'm excited about looking at, to be honest. So what happens as London opens? Well, we trade higher, running out with stops. Take out buy side liquidity. And then we have a break in market structure, beautiful break in market structure. We trade back into the fair value gap. What price respects the 50% level of it. Volume respects 50% of it. So this will be our entry. We can sell into that. If you want to get the catch the low of the day, low of the day, sorry. We have a breaker, high, low, high, high. So we look at the last down close candle before the up move, and then we can drag that out. Price even respects the 50% level of that as well. So we can sell into, that's another. So we've got the fair value gap that we're selling in, and we've also got the breaker that we're gonna sell in as well. Beautiful. Price then breaks more structure. That's what we like to see, and it closes below the 50% level of that Asian range midpoint, which is beautiful. We have sell side liquidity residing down here to run for, and we have sell side liquidity below this significant swing low created here. So you can see our price just draws down to that. And remember, going to that Asia low. So you can see we leave that range one more time. This, and what is this red line? This is what is it? That's the opening price. Fair value gap here again. If you wanted to enter, breaker again. Well, more like mitigation. Low, high, low, lower, high, lower, low. So this down close candle, draw that out, trade into that here. That's another sell. You can also look at how these wicks are overlapping each other. It's another thing we should take note of. Another break in structure, fair value gap entry here. And then we eventually reach those lows, those Asia lows, just as anticipated. Here. So we buy back our position here. Now that we've taken out Asia hold, remember we've had this massive expansion yesterday on the Wednesday, remember? So we've taken out Asia lows, We're still finding support on these levels. Remember, we continuous support. After that large expansion, we're still bullish. We're running to liquidity. So what can we be doing now? We can be waiting for some kind of expansion to the upside. So after this, I'm waiting for some kind of large run on price here, classic, and right before that 3 a.m. Right before 3 a.m. we have a nice little break in market structure. So let's look at this break of structure here. We have this buy side liquidity just resting for this swing high, getting tagged as well. So now that's a clear break in market structure to me. So I'm looking at this fair value gap and this fair value gap as entries. So we can buy in here and we can also buy in here. Now this is what drove me insane. All this consolidation drove me crazy, and this is where I need to improve myself. So I'm going to make sure to screenshot this reversal here, just so we know. These are both fair value gaps. So as this trades into this, remember 3 a.m. we trade even higher. Again, we see an expansion. We dip one more time down into that fair value gap. Optimal trade entry as well. And then we eventually run out this swing high that we got created here. And these swing highs beautifully there. So let's say we miss these opportunities here. I'd simply wait for this buy side liquidity to get tagged. Wait for the next pullback into the order block. So we're looking at this bullish order block here, and then we can be buying inside of that as well, like so. Remember, we're expecting a continuation. Why? It's 3 a.m. We've taken out the sell side off the Asian range. We've had a big bullish move during FOMC, so we've continued showing support. We've taken out lows off the Asia range, that's what I just said. We've had a break in market structure here. We've had continuation to the upside. You can see that price is continuously pushing higher. We traded down into a fair value gap and aggressively traded higher after 3 a.m. as well. We have this consolidation. This is an original consolidation, this high to this low. We can look at that, drag that out. Price is continuously showing support to these highs. And we want to see this swing high get taken out, and we want to see the Asia high get taken out because we haven't reached that yet. We failed to do it here. We traded to the 25% level of Asia though. Very classic price action here. Let me just show you guys. Very classic. Just there, that's the Asia. I just might as well draw that as well, just so we can see these Asia levels. So look how price is stepping up them. Here we find support on that Asia level here. We anticipate consolidation, anticipate support. We also have a reclaimed bullish order block here because it caused this move here, this swing high. So we can look at that as a reclaimed bullish order block. Beautiful to buy on that, beautiful, and we expect it to propel price higher. We have a propulsion block here as well. So like, there's loads of opportunity here, guys. I know it's easier said than done. And then we eventually reach here, where we can let us solve our positions, pull back, and then we pretty much consolidate. Well, we do consolidate during look at that, and then look what happens as soon as so we close above outside of it. So then we pull one more time back into the range, trading into a breaker, cheeky little breaker here. Do we trade into it? We might not even trade into it, just about trade into it here. and then price expands, running higher again as the New York session starts. Now, we don't really get much price action until 8:30, which is classic. We run back into this range, trading back down to this swing high here, and as it touches this swing high, it propels price again. Why? Because it's filled in a range. Like, this range is delivered on the downside and the upside, so we leave that. Do the same thing here, and it keeps pushing and treading higher. Also, we can look at the midpoint of this massive fair value gap that gets created, and we'll be looking at the 50% level of it more specifically. And you can see our price respects that. So long as price is respecting that, we can be buying because it shows bullishness. So it runs out these stops. Below here we have sell side liquidity. And then we have obviously buy side liquidity with these relative equal highs up here. So we have a fair value gap, we have an expansion, fair value gap, relative equal lows, relative equal highs with a clear incentive to go higher. So we can now buy this here. Beautiful. Nice little order block forms on top of this high. Pull back one more time. Then we continue. So it is hard. It does seem to be, it's really low, high, low, low. So we have a breaker here. So we can look at this as a breaker range. So we could be buying that technically again if we wanted to. Run out this buy side liquidity that's created in between. But that would be some advanced stuff. Then we continue even higher. 50% again, respecting 50% bullish order block. Making this look easier said than done. More buy side liquidity up here. It's just treading up, isn't it? Another bullish order block here, respected. Buy side liquidity up there. And then I'm guessing we pull back a little bit. And then we have the reversal on Friday, which I'm guessing does it take us down to these lows into the new week. Right, so we've got 7 minutes left of this video, so let me just quickly get the next. Let's get the final day out of the way, and then that's going to bring us to the end of this little collection of backtesting videos. I'm glad I made these though, because this is going to be like 3 weeks worth of weekend content for y'all, which I hope everyone finds useful. I'm just marking out this little breaker that I saw on the 1 minute. I want to see if price, yeah, I was assuming that price traded into that. Right, so let's look at the Asian range. So I do want to get through this in 5 minutes, which is crazy. So what happens when the starts, comes down 50%, consolidate, a lot of consolidation here. What's nice to see though, we run up, take out Asia's high, so then we can anticipate Asia's low to get taken. So how can we get in on Asia's low? Well, we have all these lows down here which get zapped by this here, so we can look at this as sell side liquidity, and then we can enter on any of these candles from then on. So we have a breakaway gap right here. That's and then I'd be looking at this fair value gap to enter in, and obviously this wick as well. Also, we have a breaker, high, low, high, high. So this last down candle here, any candle in there, we can be selling into that. And you can see our price wicks into that a couple of times. So let's say we just get added to our position. Sell, sell, sell. Because we're anticipating a run where to, just like yesterday's previous video, the Asia swing lows, and that's where we'd get out of our position right below here. You can see we run quickly to it too, which is beautiful, and then we just pretty much consolidate for the rest of the day. Not rest of the day, rest of the London session. And that's because we've done our work. So it's took out the buy side, took out the sell side, so it's probably just going to consolidate. Dip down one more time, we're in out sell stops one last time before expanding higher. Once we see this, then we can anticipate, okay, we're probably going to run for the buy side again. So we need to look for, okay, where's liquidity? Well, we have the buy side of here, relative equal highs, and we have this breaker that we assume is the high of the week, unless they're going to make it on the Friday, which is crazy. But let's say we wanted to get in one more time, we could buy this as a turtle soup. No, we couldn't. I wouldn't know that's a turtle soup. I'd probably buy this swing high though, as we trade back into it, so we can put a buy here, because we have a lot, clearly, expansion to the upside. We've run out buy stops, residing above here. So we got buy side taken, sell side taken, after already taking out those Asia sell stops. And the price kind of just flutters its way higher, respecting bullish order blocks here, here, and then I'll probably let go of my position just up there, purely because that's Asian high, and we know we've already sold above there here, so we know we can sell again there here. Trading to that breaker that I marked out earlier, consolidating that, then we've already moving lower, breaking stop, taking out stops, sorry. Quick run up, and then yeah, price starts hunting for these lows. Massive liquidity void, low resistance run, price just runs lower, lower. Where can we see an opportunity to enter here? Well, you can see how we're constantly respecting bearish order blocks here, so we can be selling into those, assuming that we know that we're going for sell side. It is the Friday, remember, so it's end of the week. So we can take that into consideration, and it's the New York, and we've already created the high of the day. That's presumptuously at that point. Looking at this last down close candle. Run on stops. This run on stops. We anticipate, okay, we must be halfway there. Have a nice another entry here. When I say halfway there, I'm talking about half. When we have a big run on stops like that, when we have a run on stops like this, it's likely that we're halfway towards our target. And at this point, our target is, well, we have all these lows, to be honest. It's probably New York's low. Now we can draw out a sell side. We need to bring this video to an end now. Do we reach it? Yeah, we do. So we could aim for that. That's yesterday's New York low. Remember, the session lows are targets. So like even the London session, we can use that low. I'm just going to use this one. But I mean, like, we can use this low as a target as well. Anyway, so we have another opportunity here as we trade up into this fair value gap, break of structure. It's all context, guys. And then we can see we trade up back into that here, so that's a beautiful sell, creating a nice little fair value gap here, which will act as a breakaway gap for us. And then we can keep selling into the bearish PD arrays. One on stops between 8:30 and 9:30, classic price action, and then we have a continuation for the rest of the day. That's going to bring me to the end of this video. This is like the third 3 of 3 videos on large expansion weeks. I hope this was useful to you guys, and I'll catch you in the next one. Peace.